Hi everyone. In this video, in this tutorial, we are going to learn about the designated zone VAT treatment in the UAE. What are the designated zone in the UAE? What are their importance and how in VAT they proceed? Okay. Now there is some list of designated zone. You can see there are around 27 designated zone are there in the UAE. You can check according to your Emirates. In Abu Dhabi, free trade zone of Khalifa port, Abu Dhabi airport free zone, Khalifa industrial zone, Al Ain international airport zone, Al Butain international airport free zone, Jebel Ali, Dubai car. Like this you can check all the free zones in Dubai, Jebel Ali, Dubai car, Dubai textile free zone area in Al Quoz, DAFZA, Dubai Aviation City, Dubai airport free zone, International Humanitarian City Jebel Ali, Dubai Commerce City. In Sharjah Hamria free zone, Sharjah airport free zone, safe zone. In Azman free zone. Al Qaim free trade zone in Ahmed bin Rashid port, free trade zone on Sheikh Mohammed bin Zayed road. Ras Al Khaimah Iraq port free zone, Iraq Butain city free zone, Iraq airport free zone, Al Hamra industrial zone free zone, Al Guel industrial zone free zone, Al Hulayla industrial zone in Fujairah free zone or Fujairah oil industry zone. Okay, these are the all as you know, in UAE is the hub of free zones. Total in the UAE till now there is 47 free zones are there. Out of those only 27 are nominated as designated zone under UAE VAT laws. These designated zone has huge amount of importance in VAT, and now in coming corporate tax also it will have a huge importance, and although free zone will have more importance in corporate law also. There is one VAT guide issued by the Federal Tax Authority. Let's we discuss this VAT guide one by one. Okay, so we will after end of this video, inshallah, we will learn each and every aspect of what should be the VAT treatment if we are dealing with mainland to free zone to mainland to designated zone to mainland. Okay, let's start. Designated zone VAT guide. These are the index. You can skip right now. Okay, let's start from the introduction. Overview. VAT has been introduced with effect from 1st January 2018 in the UAE as a general consumption tax on the supply of goods and services. It applies to those supplies which take place within the territorial area of the UAE. Historically, free zones has been excluded from the territorial scope of the UAE. Free zone never be treated as a territorial area of the UAE. It treated as a offshore units, offshore companies. For VAT purpose also, this is not automatically the case. Only those free zones listed in the cabinet decision qualify for the special VAT treatment. Like I explained you, 27 free zones are there. Only those will be treated as designated zone, and that special VAT treatment has certain limitation also. These nominated free zones are known as designated zones for VAT purpose. Designated zones are, there is a 4 condition. If whoever free zones comply this or 4 regulation, they can be called as designated zone. But we don't have to see like this, because we have the list given by the Federal Tax Authority. Okay, All those four conditions are, let's explain, subject to the strict control criteria. It means the entry to the free zone, exit to the free zone should be strictly controlled. Okay, there should be security guard checking everything, who is coming, who is going, what goods he is bringing in the free zones, what goods he is taking out, like this. Required to have security procedure in place to control the movement of the goods and people to and from the designated zone. Security procedure should be there. Come to the third point, required to have custom procedure to control the movement of goods into and out of the designated zone. Custom procedure should be there. Okay. Fourth point is treated as being outside the territory of the UAE for the VAT purpose for certain supplies of the good, not for everything, not for all good supply, not for all supplies, certain supplies of the goods. Okay, the effect for the business operating in DZ, we will call it designated zone as a DZ, will be that many supplies of goods will be outside the scope of UAE VAT, subject to strict criteria and detailed record keeping. There is 2 point is there to be have to be noted: strict criteria and detailed record keeping. However, supply of services are subject to normal UAE VAT rules. Wheresoever is the supply of services, that will always have normal UAE VAT rules. Like it will be chargeable to at standard rate. If we are giving, if anyone providing services to the free zone providing services to the another designated zone, like this. If two designated zones company providing each other services, that also be subject to the UAE VAT law, normal UAE VAT law rules. Strict qualifying criteria are applied to limit the use of designated zones measures to those businesses for which it is designed. That is, it is a measure to facilitate international trade on a VAT neutral basis and is not one designed to enable tax avoidance at any level. Purpose of this document contains more detailed guidance about characteristics of a free zones which must be present in order for it to qualify as a designated zone for VAT purpose. In addition, this document provide guidance for businesses operating in designated zones seeking to understand VAT implications of their activities within and outside the designated zone. Now we will start from here. Now main point will start. That all was the introductions only. Identification of the designated zone, VAT treatment of free zones, that we already discussed. Now once again we will discuss in details. VAT is a general consumption tax imposed on most supplies of goods and services in the UAE. By default, it is chargeable on supply of goods and services throughout the territorial area of the UAE. This territorial area will also include those areas currently defined as both fenced and non-fenced free zones. For VAT purpose, both fenced and unfenced free zones are considered to be within the territorial scope of the UAE and therefore subject to the normal UAE VAT rules unless they fulfill the criteria to be treated as a designated zone as defined by the federal decree law on VAT and executive regulations. Those free zones which are designated zones are treated as being outside the territory of the UAE for VAT purpose for specific supplies of goods, not all supplies of goods. In addition, there are special VAT rules in respect of VAT treatment of certain supplies made within designated zones. The effect of these rules is that certain supplies of goods made within designated zones are not be subject to the UAE VAT. In contrast, Supply of services made within designated zones are treated in the same way as supply of services in the rest of the UAE. That I already explained you. Supply of services every from mainland to DZ to another DZ anywhere in the UAE, it will be subject to the normal rules of UAE VAT. Important. Free zone meeting the criteria have been specifically identified by way of a cabinet decision as designated zone. Where a free zone is not a designated zone, it is treated like any other part of UAE. Identification of designated zone, that you can get it from the FTA website. This list you will get. Okay, these all four conditions I already explained you in earlier points. Specific fence geographical area, it should be. Security measures should be there. Custom control should be there for entry exit of individual and movement of the goods. Designate should have internal procedure regarding the method of keeping, storing and processing of the goods within the DZ. Operator of the DZ must comply with the procedure set out by the FTA. These 4 points, if every DZ has to be comply. This means that where a DZ has area that meet the above requirements and areas that do not meet the requirements, it will be treated as being outside the UAE only to the extent that the requirements are met. In addition, should a DZ change the manner of its operation or no longer meet any condition imposed on it which led to it being specified as a DZ by way of cabinet decision, it shall be treated as though it is located within the territory of UAE. Important, only where a DZ met all the above tests, it can be treated as outside the UAE for VAT purpose. Point number 2-3. Entities within DZ. Those businesses which are established, registered or which have a place of resident within the DZ are deemed to have a place of resident in the UAE for VAT purpose. The effect of this is that where a business is operating in DZ, it itself will be onshore for VAT purposes, even though some of its supply of goods may be outside the scope of UAE VAT. Why UAE VAT treating DZ companies as equal to the mainland company for all VAT regulations other than some specific out of scope supply? Because they want to impose every rules and regulation for maintaining books of accounts, for auditing, for VAT refund, for input VAT. They want every rule should be similarly applied to the DZ companies as it's applying to the mainland companies. It has many benefits to the free DZ companies that we will see in next couple of minutes. VAT registration, as although it is similar, all the provision will be applied equally to the DZ companies. The VAT registration rules will also apply same like other mainland companies. Any other person that is making textile supply or incurring expenses which are subject to VAT in excess of the voluntary VAT registration threshold may apply to the registration for the VAT purpose. Important, DZ businesses are considered to be established onshore in the UAE for VAT purpose. This means that they have the same obligations and as non-DZ businesses and have to register, report, account for VAT under normal rules. It also means they can join a tax group, VAT group, provided they meet the required conditions. It will have some many benefits also for this condition. Application of VAT in DZ mainly. Introduction, as outlined above, in certain instances an area of DZ will be effectively treated as offshore for VAT purpose, that is, as it is outside the territory of the UAE for the purpose of tax. Since UAE VAT only applies on supplies made in the UAE, Such special treatment of DZ will be affect the VAT treatment of supplies made within DZ. This section of the guide discusses the consequences of treating DZ as being outside the UAE for various types of transactions. Now for the supply of services, okay, place of supply will be the UAE, so VAT will be charged. Okay, the place of supply of services is considered to be within the UAE. If under the normal rules, the place of supply should be the designated zone. This overrides the normal provisions of the supply of services rules that in all the circumstances the place of supply of services supplied in a DZ revert it to the UAE. Whether supply of services, we are providing services to the DZ, as per the normal rules, POS, place of supply should be the DZ, but for this rules only, the place of supply will be the UAE. Such supply are then taxed in accordance with the general VAT rules for supplies of such services. This means that more services will be liable to the VAT at a standard rate, as would be the case where they performed within the UAE. Equally, where services are exported, that is, made to a person who is resident and located outside the GCC implementing state, then services may be zero rate. If services providing by DZ company to the UAE company, then it should be charged as standard rate. If DZ company providing services out of UAE, out of this GCC implementing states, then it will be as export of services at a zero rate. Point number 3.3. Now main discussion will start. Supply of goods within a DZ. As outlined above, DZ will be treated as being offshore if the necessary conditions are met. Default rule: since the place of supply for goods generally follow the location of goods, a supply of goods within the DZ is treated as being made outside the UAE. This means that default position is that such supplies are not subject to UAE VAT. Okay, override of the default rule. This default position is overridden where a supply of goods is made within a DZ to a person to be consumed by him or another person. In this situation, the place of supply will be treated in the UAE and VAT will be applicable under the normal rules. Like we are supplying some goods from mainland companies to the DZ, and those goods will be consumed by the person by himself or any other person within that DZ. Okay, then the place of supply will be the UAE and VAT will be applicable under the normal rules. Main default rule was place of supply will be the outside the UAE, VAT should not charge, but if it is going to be consumed by the himself and any other person within the DZ, then it will be place of supply will be the UAE and VAT will be charged under normal rules. Okay, here is the example. You can see from DMCC and DAFZA, both are designated zones. Okay, if they are doing transaction within them, then it will be out of scope, but if goods consumed within the DZ, then it will be VATable, tax will be charged. Consumed, we will not treat this as a consumption if some conditions are satisfied. We will see in next video, next slides. In above context, the term consumed should be interpreted broadly as including any utilization, application, employment, deployment, exploitation of the goods. For the purpose of the provision, the resale of purchased goods is not treated as consumption of goods. Like we purchase some goods for reselling, that will be not treated as a consumption. Therefore, a supply of goods in such circumstances would still be outside the scope of UAE VAT. If the purchaser intend to resell them. Furthermore, it should be noted that override does not apply and supply can still be treated as being outside the scope of VAT when the purchased goods are incorporated into, attached to, or otherwise form part of another goods located in the same DZ, and that other goods is not consumed. Like anything, any material we inbuilt into the main product that we are not going to consume within the DZ, our intent is to resell them. Okay, that will be not treated as consumed within DZ. Okay, that will be out of scope. VAT will not be charged like this. Okay, you and used in the production of another goods located in the same DZ, and other goods is not consumed, like machine tools. Okay, that is going to be used in the production of another goods in same DZ, that and the that other goods is not consumed. For the purpose of the second exception to the override, there must be a direct connection between the purchased goods and the production of another goods. For example, the exception will generally apply to the tools and equipment used to manufacture the goods. In contrast, a computer used by businesses to create design for goods which are later manufactured will not have sufficient connection with the goods to be treated as used in the production of the goods. Okay, the following are some of the examples we can see. Like a business buying trading stock for the purpose of resale within the DZ. Businesses buying trading stock. Okay, outside the scope, trading stock. The resale of goods is not treated as consumption. An oil equipment manufacturer in the DZ buys steels which will be used in the production of equipment. That manufactured equipment is then sold by the manufacturer outside. Steel used in the manufacturing, it's outside the scope. Although steel will be consumed by the manufacturer, this steel will be form part of the manufactured equipment, which itself will not be consumed by the manufacturer. As a consequences, the exception to the default place of supply rules in the 51.5 or the VAT executive regulation will not apply. A manufacturer in the designated zone buy work tools which are used in the manufacturing goods. The manufacturing goods outside the scope. Work tools used in manufacturing outside the scope. Same reason. A business in the DZ buys a office computer, food stationery, company car, fuel for the company car, office furniture, similar goods to be used in the general running of the business. All those things VAT will be levied, because all this will be consumed within the business. Manufacturing the DZ buys a computer to be used to create design for goods to be manufactured by the manufacturer within the scope of UAE VAT. Computer used for design, no direct connection, so UAE VAT normal rules will be applicable. And individual buy goods in the DZ to be used for private person purpose then within the scope of UAE VAT. Since the goods will be used for non-businesses purpose, then they will be treated as consumed by the individual. The flowchart below provide an indication of a decision making process. Okay, see this flowchart carefully. All our up to till discussion will be clear from here. Is the supply of goods or services? If services, always it will be taxable. Unless or until we are selling it, we are supplying of services outside the GCC implementing states. Okay. Now for goods, are the goods purchased by the recipient to be used by it or another party? Yes. With the goods will form part of or be used in the production of another goods located in the same DZ, which itself is not consumed? Yes. Then outside the scope. Okay, if it is going to be used by the person himself or any another party, that normal rules will applicable. Okay, one thing is here we should note, supplying from mainland company to DZ, okay, that is not a export. That is, what is that? That is on normal provisions. Place of supply is DZ. DZ is outside the UAE. We treat for the VAT purpose. Then VAT should not be charged. We are not saying it, and nowhere it is mentioned it is export of services, export of goods. Normal provision is going to apply. Under normal provisions, place of supply is DZ. That's why VAT is not going to be charged. If it is going to be used for business purpose, reselling purpose, okay, and it's going to be used in the production that going to be resell in the future also, okay. Identification of intended use of goods. Onus on supplier. The onus, the burden of proof that buyer going to be use this purchased product in their production, in their making another product. The onus is on the supplier. Supplier has to prove to the FTA that buyer is going to be used in business purpose, okay. The written statement should take, supplier should take written statement from the recipient of the goods, okay. This is very important. Written statement should be there, and onus is on the supplier. Supplier has to prove, okay. Very good, you should note this point. Now come to point 3.4, transfer of goods into a DZ. Transfer from outside the UAE, goods coming from India to DZ, DMCC you can say. That is, since DZ are treated as outside the UAE for VAT purposes, a movement or supply of goods into the DZ from outside the UAE would be treated as taking place outside the UAE. Therefore, no UAE VAT would be charged on such movement or supply. Like goods coming from India to DZ, DMCC, safe zone, okay. Then goods coming outside the UAE to the outside UAE in DZ, because DZ also treated as outside the UAE, so it will be a out of scope supplies, okay. Now next point, transfer from mainland UAE. Like from mainland, goods are going to DZ. Here I was explaining earlier point, this was not treated as an export, okay. A movement of own goods or a supply from mainland UAE to the DZ is not to be considered as an export of goods from UAE. Therefore, such movements and supplies are treated as local movements and supplies, okay. Transfer between DZ zones, from one DZ to another DZ, goods are moving, okay. Like from DMCC to the DAFZA, from DMCC to the safe zone you can say, okay. A transfer of goods, that is either a sale or a movement of own goods between two DZ, will be treated as outside the scope of VAT, subject to the two conditions are there. First condition is this: the goods either in the part or they're entirely not released in circulation, nor used or altered in any way during the transfer from one DZ to another DZ. It should not be altered, it should not be released anyway, okay. The second condition is the transfer for the goods is undertaken in accordance with the rules for the custom suspension as per the GCC common custom law. Important to be noted, where goods are moved from DZ, the FTA may require the owner of the goods to provide a financial guarantee for the payment of VAT, which that person may become liable for should the condition for the movement of goods not be met. If condition of the movement are not met, then that security, that guarantee can be forfeited by the FTA also, Okay, FTA can demand this. Import of goods from DZ. Okay, now from DZ goods are going to UAE mainland. Okay, a movement of goods from a DZ into the mainland is treated as import of goods into the UAE. Therefore, import VAT is payable by the importer of the goods. Like goods going from DZ to UAE mainland, it will be treated as import of goods, and import VAT will be applicable. It should be noted, however, that there may be a situation when goods were subject to VAT when purchased within the DZ, and then subject to the VAT again when imported by the same person in the mainland company. While purchasing the goods from mainland, there might be the scenario when we have paid the tax, and there might be the scenario when we are selling, and the same company is purchasing from DZ and paying import VAT also. Okay, this can be the scenario. At the time of purchase we pay the VAT, at the time of import from the DZ we have to pay the VAT. Okay, where a VAT registered person has incurred VAT on purchase of goods within a DZ, and then again on import of the same goods from the DZ into the mainland, the VAT registered person will be able to recover VAT incurred on importation of the goods into the mainland in full on its return, irrespective of the person normal input tax recovery percentage. It should be noted that import VAT can only be recovered in respect of the goods under this special rule if the same goods were subject to VAT when purchased by the importer in the DZ, and that there were no intervening transaction in respect to the goods between the purchase by the importer and the actual import. The importer is required to retain evidence and provide it to the authority, because in this scenario on import of the goods he is not going to pay the VAT, he can recover it. Okay, then he should retain the evidence for everything, how goods are moving, okay, from mainland to DZ to again coming back to him. Okay, like this he has to maintain the proper documentation. Authority can ask anytime. Okay, you can't fool the authority by making any kind of planning and bloatings. Supplies following importation. It is important to remember that even if VAT is charged on the import of goods into the UAE mainland from the DZ, VAT may also be charged again on the subsequent sale of goods within the mainland on the date of supply of that sale, that is if it is taxable supply made by a taxable person. Like we imported the goods into mainland from the DZ, now we are doing business, we are reselling that product. Okay, if VAT is chargeable there also, it is subject to the standard rated VAT. Okay, then VAT will be applicable. We have to check the date of supply. Date of supply should not fall before the goods are imported into the DZ. Okay, we have to check the date of supply. If date of supply is before the importation, then it is free zone treatment. Okay, then treatment will be different. It's depend on the case to case basis. Summary. The table below provide high level examples of potentials. We are going to the table now. Okay, if we understand there is a two table, this is the one and this is the two. If we understand these two tables, our 99% doubts regarding free zone DZ will be cleared. Okay, now come to the scenario 1. Goods are imported in from DZ into mainland. Okay, it is from DZ to mainland, it is import of goods from DZ into the mainland. Goods are sold in the mainland by the importer. Okay, for the first case the import value will applicable. In second scenario, sale of goods in the mainland, supplier charge VAT on sale. Normal scenario. Goods are sold within DZ, okay, and the goods will not be consumed by the purchaser. Okay, sale of goods within DZ outside the scope of VAT, because place of supply is DZ here. Second thing is goods are imported into the mainland by the purchaser. Import of goods from DZ to mainland, import VAT will applicable. Now this is the main condition, main scenario. Goods are sold within DZ and the goods are intended to be consumed by the purchaser. Okay, sale of goods within DZ. Okay, supplier will charge VAT because buyer, purchaser has the intent to consume it. Okay, the goods are, now come to this point. Okay, goods are imported into the mainland by the purchaser. Movement of goods from DZ to mainland, import VAT will applicable, but can be recovered by the VAT return. Now point number 3.6. In all cases, goods which are located in the DZ on which the owner has not paid VAT will be treated as import into the UAE, where goods are consumed by the owner. Goods are consumed by the owner unless the goods are incorporated into attached to or otherwise form part of or are used in the production of another goods located in the DZ and that other goods is not itself consumed, like goods are consumed by the owner unless the goods are incorporated. Okay, the goods are unaccounted for, goods are not accounted for. In this scenario, in these two cases are there, then import VAT will be applicable. Where VAT has not been paid on the acquisition of goods, owner has to monitor the status of the goods to ensure the VAT is paid. If conditions are importation is triggered, if these two conditions are triggered there, then importer should know he has to pay the VAT on the trigger of these two conditions. Now high level outline of the VAT treatment of the goods. This table is very important. Okay, now see example. Origin from DZ, one DZ to same DZ. Okay, DMCC to DMCC outside the scope of VAT, subject to the conditions are met. From one DZ to another DZ, from DMCC to safe zone. Okay, outside the scope of VAT, subject to the certain conditions. Okay, financial guarantee may be asked. From UAE mainland to DMCC, subject to the normal VAT rules. Like if place of supply is DZ, then normal provisions will apply here. This is the important case scenario. From if goods are going from mainland to DZ, it is not an export. Normal VAT rules will apply. Under normal rules, place of supply is DZ. DZ is treated as outside the UAE. That's why it will be the out of scope, not an export. Okay. From DZ to mainland, it is an import and import VAT will be applicable. Okay. Outside UAE, from India to DMCC, goods are coming outside the scope. From DMCC to India, goods are going outside the scope. Now these are two things are very important. I am just telling you the crux. Supply of water and energy. If water and energy are supply of there in the DZ, it will be always taxable. If consumed within the DZ, okay, always will be taxable. Water and energy. Under energy we will include electricity, gas, biogas, coal gas, LPG, natural gas, oil gas, producer gas, refinery gas, reformed natural gas, tempered LPG, or any mixture of gases. Okay, whether used for lighting, heating, cooling, AC, any other things. Okay, all these will be always taxable. Okay, but in case of supply of oil, gas, or other similar goods, if they are traded, where we are going to resell those things, then it will be outside the scope of VAT within DZ. Okay, all rules will same. Supply of real estate means buildings. If we are supplying the buildings, like we are selling the buildings, then it will be outside the scope of UAE VAT. Okay, because place of supply is where is the building is situated. Building is situated in DZ, so it will be outside the scope of VAT. But on same treatment to the raw material also. If we are purchasing raw material from one DZ to another DZ, from same DZ, okay, from the outside the UAE, if we are purchasing any raw material, then in place of supply is the DZ, then that also outside the scope of the UAE VAT. But for rental income, okay, that is a service. Rental income, rental is a service providing the service. Landowner is providing the service of rental, okay, that is a service, so it will be VATable if these are given for a commercial purpose, because for residential purpose it is not a VATable. Okay, now these two are clear point of view. Now tax group. These two are very important, tax group and branches. Many people confuse, they don't know what should be the treatment. Okay, for tax group, you understand, we have one company in mainland LLC, we have one company in DMCC, let's assume, okay, safe zone. Okay, now we form a tax group, we are part of the same tax group. What is a normal treatment? If we are supplying from one tax member to another tax member within the same group, that is, we don't charge any VAT on that transaction, that is out of scope. Okay, no VAT is charged on that transactions. But if one group member is in mainland, another group member is in DZ, then treatment will be totally different. Let's analyze the things. For tax grouping purpose, a business established in the DZ, which is still treated as a UAE businesses, is able to form a tax group with an onshore company or companies, or another DZ companies or companies subject to the meeting the normal control criteria. That's simple. The usual consequences of tax grouping follow, such as supply between the members being disregarded for VAT purposes, and there being joint and several liability of the tax members of the tax group. It should be noted, however, that where a supply of goods between the tax group members result in goods moving from DZ to the UAE mainland, the importation of the goods would trigger the obligation to pay import VAT. The payment of import VAT will be done using normal process for such payments. That is, VAT registered tax group member will be able to defer, like he will his import will come in point number 6 in the VAT return, and he can reverse it in point number 10. Okay, if it's not coming pre-populated, he will claim it, he will pay tax of import VAT in point number 3 of the VAT return, he can reverse it under point number 10. Okay, like this. And same in case of branches also. If one branch in mainland and another branch is DZ, then same treatment will be happen. In case of goods coming from DZ to the mainland company, he has to pay the import VAT, and he can also claim in point number 10. Reason being is goods are coming from the DZ. Okay, that DZ we already treated as outside the UAE. Okay, and we can claim in the point number 10 VAT ITC only all the other conditions are fulfilled. Okay, I hope points are cleared. Now last point, VAT recovery. Business operating in the every VAT recovery rules are same. Okay, like a normal businesses. Okay, business operating in DZ will be subject to the normal VAT rules of VAT recovery on their expenses. If business making only supplies which are liable to VAT, it should be able to recover its VAT on expenses in full. Where business making supplies which do not give right to the VAT recovery, the business is unable to recover VAT on expenses direct attributable to the making such supplies, exempt supplies. Where expenses related to both supplies that give right to the VAT recovery and that do not give, like he is making taxable supply also, he is making zero rated supply also, he is making exempt supply also, then we will apportion those things. I hope now this designated zone is regarding all the VAT treatment concept is clear. For any professional consultancy, for professional any advice, you can contact me anytime. I will mention my phone number, email ID in the description of this video. I hope this video will benefit you a lot. Thank you very much.